When you have one big piece of risk at the bank, or if you have two smaller ones, you look less risky. And that gives you the ability to get more money from the bank. You need a property analyst, you need a banker, your lawyer, mortgage brokers. It's the people around you that make you. So you've got X amount of money that you can invest. I would choose, after 3 years, you will have a multi-million-dollar portfolio. Welcome to the Passive Property Investor Podcast, where I teach you how to stop trading your time for money with property investment. I'm Jerry Parker, your property investment consultant. Let's dive in. Hello, passive property investors. We're back here for another episode, and I want to impart with you, this is a lot of the deep information that I've built through my entire investing life, and I want to tell you how to build a multi-million-dollar property portfolio. I'll take you through some steps. First, you got to think about your entry strategy. How are you going to go in and buy the property that I've sort of always thought like a developer. I want to buy something that's less than what it's worth right now. So what is your entry strategy going to be to buy this property? And one that I like is you go buy a new property on a new block of land near a new big piece of infrastructure that's going to drive the property price up. And you build the new house there, and the developer puts the price up for you. The infrastructure puts the price up for you, so you know you're getting the property cheaper. You know you're making money as soon as you buy the property. Another important thing that people overlook is in your asset selection. And so you've got X amount of money that you can invest. And what if you could buy something for $1 million? Or you could buy something for $500,000. I would choose two of the $500,000 because that gives you the ability to borrow more money from the bank. When you have one big piece of risk at the bank, they're going to look at that, the riskiness of that. Or if you have two smaller ones, it's much less risky. You could sell that one off and keep this one, or keep them both. So you look less risky to banks. And that gives you the ability to get more money from the banks. And you're going to grow your portfolio at the same rate that you're able to get money from banks. So we want to pick up the ability to get more money from the banks so we can buy more properties and build our portfolio faster. Another important in this risk management and building your big property portfolio is diversification. And this has undone a lot of people not being fully diversified. What I mean by that is, I remember back in the day when the mining boom was happening, everybody fully loaded into mining, and then it crashed and didn't work out too well. So you need to diversify yourself over regions and locations around Australia. They're growing at different rates. There's hundreds, thousands of different little property markets and reasons why they're going. And like, for instance, the Olympics is coming up near Brisbane. Maybe you want to take advantage of that, or maybe you want to take advantage of rural New South Wales happening down the Central Coast, where there's a lot of new infrastructure going in there, where there are two different markets altogether. And when you're making small bets into each market, you get the diversification of each. If one slows down or one goes a little bit faster, it's helping your portfolio build. The essential to building a multi-million-dollar portfolio, you can buy one property, you can buy two properties, but eventually you're going to have a good, solid team around you. That's your accountant, your lawyer, you need a few real estate agents, never-ending real estate agents. You need mortgage brokers, you need a banker, you need a property analyst that can help you find locations. You need a property expert that can help you execute your sale or put together your whole portfolio, like in a financial planning sense. And you need this team around you that helps you become a business owner of your own property business. And it's a very much of an entrepreneurial pursuit, and it's the people around you that make you. Number 5, I would say, is your property management. I've seen a lot of people mess up here. You need local management for your properties, and you have to manage the manager. They have to be under control. You have to give them rules. And some of the rules are like, I got to have photos of the properties every 3 months. and the tenant sticks to the letter of the law of the rental agreement. They don't come ask you for little extras or fixing things or problems along the way. The management handles that. And another big one is probably the biggest mistake is the manager has to put the rent up every time the lease expires. I don't care how much. I don't care what happens to the market. I don't care if it's anything. The rent's got to go up. Even if it's $5 a week, the rent goes up. These are just some of the important things you need to know if you're going to be building a multi-million-dollar portfolio. Let me wrap this up and let me tell you what I do. You know, it's a lot, once you've got a good understanding of what you're doing and where you're going, you need deal flow. You need deals coming to you so you can see them. And I set up my deal flow initially, and I know exactly where I'm going through the year, through more than 1 year, through 3 or 4 years. I know exactly what I'm doing, where I'm going. And I'll tell you the strategy that I do. I've got a few, but this is the baseline strategy that I have going on at all times. I go find where new major billion-dollar infrastructure is happening. It could be the train station. It could be, they're happening everywhere. In Melbourne, in Brisbane, Perth, all over the whole country, these major infrastructures are happening, and they're coming from the government and the private sector are building them. I go into those areas and I find new developers, land developers, and I get the good ones, the Lendleases or the Stocklands, or the ones who build good communities where people love to live. And I go in there and I got a relationship with those people, and I say, when is the next land coming out? And I will put my name down or buy it or option it on good flat level blocks of land where I can build a nice 4-bedroom house on it with minimal earthworks or zero earthworks, and have that little deal flow set up in front of me in advance. And then as they come, I will buy those properties and build the house, buy the properties and build the house. But sometimes maybe I'm not ready for it. I might not, I'm not ready for this, that my finances aren't right, but I got to buy this property. I'll just sell the land. And I'll usually make money on the land because I'm buying the land off the plan. And there's demand for it. And it's never done me wrong. You've got the $1 billion, the three aspects are going to make money. You got first of all, you're buying the land off the plan. The cheap is brand new, the cheapest price you're going to get it. And then the developer is putting the price up down the road anyway. In 2 or 3 stages, they put the price up. And the third way is I'm riding the coattails of $1 billion developer bringing this infrastructure in there and then bringing where all these people want to live. And I have this going 24, never stops. And it gives you a constant deal flow. And after a few years, after 3 years, you will have a multi-million-dollar portfolio. That's what I do. So I hope that helped you. Good luck on your journey and keep investing. Do not stop investing. See you again. Thanks for tuning in to The Passive Property Investor. If you enjoyed this episode, the best way to show your support is give a 5-star review on Apple Podcasts and Spotify. Make sure you subscribe to the YouTube so you don't miss a single episode. We're on all social media platforms, so feel free to connect with me there. And if you're having specific problems making your first investment or building your portfolio, maybe you don't know which location to invest in, how much you should invest, you're worried about who to trust, reach out for me down below. I will have the answers for you. Don't hesitate. See you on the next episode.